Welcome back to the Financial Times, where I'm joined by Rob Nichols, the incoming President and Chief Executive of the American Bankers Association, which is the biggest trade group representing all these bankers, representing about 15 trillion of assets. Rob, welcome.
Thank you very much, Ben.
And let's start by talking about regulation, which when I speak to bankers, that's all they want to talk about. They say there's too much of it. The regulators, since the financial crisis, have got completely carried away, and we're getting to the point now where we're crimping growth and we're hurting the economy. Is there any truth in that?
I think there is something to that, Ben, and that's why we're pushing for regulatory relief here this year in the United States Congress, particularly for the smaller financial institutions. There's an acknowledgement here in the smaller banks that some of the policy response in the form of Dodd-Frank has tripped up and caught up these smaller, these banks that serve their communities all across the United States, and that there should be some regulatory relief. So we're encouraging that dialogue. We're talking to people in the House and the Senate, Democrats and Republican alike, and what's great is that this is pretty bipartisan. There is an acknowledgement here that some of the smaller banks are facing a strident regulatory architecture that wasn't intended for them. So that's an encouraging set of conversations.
The overarching aim of Dodd-Frank, of course, was to end too big to fail. Do you think that has been accomplished?
Well, massive strides have been taken there, massive strides. You have capital and liquidity have been doubled. You now have a mechanism to resolve a large financial institution in a way that doesn't put taxpayer money on the hook and does so in a non-chaotic fashion. Those are tools that didn't exist before the crisis. So those are really positive developments. I'll tell you, every member of the ABA wants to end too big to fail, from the smallest community bank to the largest globally active bank to regional banks and mid-sized bank. Everyone wants us to move to a place where taxpayer money is never put on the hook again.
Mm-hmm. Let's move on to talk about the future of finance, financial technology, and particularly what millennials are after from institutions that people normally default the choice was to go to a bank. There's surveys out that I've seen this. Millennials, that generation, would much rather drop in on the dentist than go to a bank like Bank of America or Citi or Chase. How does the banking industry, the mainstream banking industry, win these people back?
I think this is a really important issue for the banking sector and for ABA. So number one, you have this group. It's about 84 million Americans now. It's now the largest demography. It's overtaken the baby boomers that are wary. Some of them are wary of banks or don't think they'll need a bank. That's problematic. We need to convince them that having a relationship with a bank is important, so we need to unpack and debunk some of that thinking and speak to them in ways that are more compelling, I think. Also, you have this issue of the labor force issue, Ben, where you have this whole group of young Americans who say, when you ask them, where do you want to work? Do you want to work in banks or the tech sector? The banks are not top of that list, and we need to get banks back on top of the list. There's a lot of great professions in this country. There's manufacturing and energy and healthcare, medical, legal, banking, and tech. I want banking first among equals. I want to get the banking cool again. And we have a lot of work to do. We have obviously a kind of a hangover from the financial crisis that's impacted probably the folks thinking about working at a financial institution, particularly a bank. But these are two really important issues that pertain to millennials.
Right. And of course the money that continues to flood into Fintech is extraordinary, suggesting perhaps that the profits to be made in the sector are greater than the profits to be made in the traditional banking sector, which makes me wonder if it's a fair playing field between these largely unregulated financial technology firms and the mainstream banks. Is there an imbalance here?
That's a sharp question, because listen, you've seen a huge money flow into Fintech. So in 2013, $3 billion of venture money. Last year it was $12 billion of venture money. I'm betting it's in the 20s next year, this calendar year. And the question is, what will banking products look like when they're delivered to our children? You and I have younger kids. I don't know how they're going to receive their banking and financial products, but it's going to be different the way you and I do today. And the question is, how is regulation going to keep up? You need a level playing field. You can't have a Wild West scenario where you have these products that aren't protecting the money and the financial data and the identifiers, which are what banks work so hard to do. Banks are all about innovation. They want to make it very easy and interactive and innovative for you to get your money and move it around and deploy it in the way you want to, of course. But at the same time, we need to make sure it's safe. There's a huge cyber component to this. There's a security issue. And yes, regulation is going to need to keep up with this rapid convergence of banking and technology.
So is the problem that the regulators are set up to deal with the old world of banking?
Right.
And there's nothing explicitly looking at fintech.
Right. Well, they realize it's an issue. I've met with countless regulators over the last several months and raised this issue with them. They all know it's an emerging issue. They don't have the answers yet either, but they absolutely realize that they're going to have to keep pace with innovation as well.
Thank you very much, Rob Nichols, for coming in and speaking to us.
Thank you very much for having me.